Welcome to the Stock Market Daily News Podcast. Today is November 5th, 2025, and we're breaking down the action from Tuesday's session. The S&P 500 lost nearly 1.5%, the Dow Jones fell just over 1%, and the Nasdaq dropped almost 2%, marking one of the sharpest pullbacks in recent weeks. A warning from the heads of Goldman Sachs and Morgan Stanley about an imminent correction, rising tech volatility, and fresh economic jitters put investors on edge. Today, we'll cover the big risks on the horizon, what's spooking traders, and which stocks are turning heads. Kicking things off, the market's momentum stumbled as top Wall Street CEOs warned a bigger drop may be coming. Goldman Sachs David Solomon said investors should brace for a 10 to 20% drawdown over the next year or two, adding that even in bull cycles, double-digit pullbacks are common. At the same financial summit, Morgan Stanley's Ted Pick said these corrections are actually healthy, if not triggered by a shock. Their comments followed recent concern from the Fed and IMF about overheating, especially in AI-related stocks. For investors, it's a cue to double-check risk and recalibrate portfolios for volatility. Shifting to tech, the so-called Magnificent Seven — Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla — showed fresh signs of froth. Option skews flipped, signaling traders are piling in for more upside, a pattern that's historically preceded short-term tops or reversals. The Invesco QQQ Trust fell 1.5% in pre-market, and trading volumes in these giants spiked. The takeaway: be wary of excessive optimism right now in mega-cap tech, especially after months of record highs. In crypto, Bitcoin tumbled as low as $103,000, revisiting its lowest level since June and sinking 20% from last month's all-time high. The move comes as a key support level finally broke, with technical indicators pointing to more possible downside toward the $95,000 zone. Altcoins like Ether and Solana also sold off. Behind the crypto plunge, a surging dollar, stalled Fed rate cut expectations, and general risk-off sentiment as the U.S. government shutdown drags on. For traders in digital assets, expect volatility to remain the norm. On earnings, Palantir delivered blowout third-quarter results, with sales surging 63% to over $1.1 billion. CEO Alex Karp's latest shareholder letter struck a combative tone, touting Palantir's growth as confounding Wall Street skeptics. Still, while shares have rallied sharply, fueled partly by government and defense contracts, some analysts warn the current valuation may be running ahead of fundamentals. The lesson: rapid growth stocks can deliver huge rewards, but headline risk and sharp swings are part of the package. Rounding out with steady blue chips, Clorox is catching the eye of value hunters. Shares are down 33% from their one-year high, trading at a price-to-earnings of 17. Margins remain stable, and the company's consumer brands provide reliable, if modest, revenue growth. It's a classic defensive play, but as history shows, even steady stocks can take hits during broad market sell-offs. Let's close it out. Yesterday, the S&P 500 settled down to 4,700, the Dow ended under 36,000, and the Nasdaq snapped back to 15,200. Key themes: rising caution on Wall Street, growing tech sector froth, and pockets of value in defensive names. Looking ahead, keep an eye on upcoming jobs data and the next Fed meeting for more direction. Be sure to subscribe and join us tomorrow for your essential daily market update.